Hello everyone, welcome to the Ichimoku.co and Forex Trading TV daily FX market review for the trading day ending Wednesday, November 19th. Firstly to the Euro US dollar, and here we see a candle that's formed a very small body candle. I'll just zoom in a little bit. And it's the candle that has tested up to the 125.84 level of previous support and resistance and been rejected from there. The buyers had control for the previous day's trading above the Tenkan-sen indicator, but today they've lost that control with neither party taking control. This does raise doubt about continuation of the trend to the upside, and the small white body also suggests that the buyers, even though they've maintained momentum to the upside, it is certainly not as great as it was previously, and does suggest that there is a possibility of a change of trend, and that's because of the lack of control and the loss of net momentum. If the market does come off, however, very strong support at the Tenkan-sen expected at 124.96, and just below at 124.55 previous support area could hold this market, and we could see some buying come in around there. But a market that's bound between this close by resistance, with the Kijun-sen just above that resistance level where we saw rejection from for today's trading at 126.01, and bound by close by support. We are still trading within this flag type pattern, and we will be looking for a close either above the upper barrier or below the lower barrier to complete the pattern. Greater probability of a trade if the market does close down below the lower barrier. That would be in line with the market being bearish in all three timeframes if we can trade down through the Tenkan-sen. And this bearish activity in the longer term and medium term time frame is still supported by the Chica span being below the corresponding price action, so suggesting that there is still a good possibility of the next move in a bigger picture term time frame being to the downside. Looking at the bands here with the Euro US dollar, and here we see the market trading up above the upper band, the middle of the bands, and it does suggest that there is a possibility of the market trading to higher levels. The important thing here is how the middle of the bands held as support, with price action testing down below there and being rejected from there. So even though we see the market attempting to rally on a spinning top type candle, quite some indecision in the market, the buyers losing control, but by the same token the sellers haven't taken control. The sellers lost commitment down below that level, and the middle of the bands is going to be quite important. 125.31 is where it trades, and at the moment as we watch this new candle trade, we are seeing that area hold as support. Now if the market does continue to rally, and there's no guarantee of that happening, but if it does, we'll be watching the upper band at 126.24 to hold as strong resistance. If we breach the middle of the bands and close down below there, looking to support at the lower band at 124.37. Next to the US dollar, Japanese yen, and here we've seen continued buying coming into this market, and a very solid bullish candle today following the small body candle, finding resistance around the 117 level. For today's trading, we've seen an extension to the size of the white body, highlighting that the buyers have made a very solid amount of net momentum to the upside, and really coming into the market very strongly, closing with control, showing very strong commitment by extending the close well beyond the previous close. The market has found some resistance at the 117.94 area, but as we watch this new candle trade, we are seeing the buyers extend the move to the upside, trading up through that area, and that area now holding as support. Possibility of the market trading to the 118.90 level. We do have a bullish market in all three timeframes, trading above each of the Ichimoku indicators, strongly supported by the Chica span, but as I've mentioned previously, looking very overextended in the depth away from the cloud, from the Kijun-sen, and now even away from the Tenkan-sen and the Chica span, away from the price action. So looking overextended, but no sign yet that there is a potential for a pullback at the moment. We see no strength from the sellers in this market at the moment. If we do see strength from the sellers, it will suggest that there will be a possibility of a pullback, and even if that does occur, we're likely to find very solid support at the Tenkan-sen indicator at 116.05. Just looking at our bands here very closely, and here we saw the market opening just up above the upper band and going on with the move. Buyers strongly in the market, suggesting that we still have that very, very strong bullish bias in this market by trading outside of that upper band. Looking to the upper band to hold as strong support if we do see the market come off, trading at 117.05 at the moment. Next to the US dollar Swiss franc, and following the very strong black body candle that we saw previously, being strongly rejected from the Tenkan-sen indicator, sellers taking control, we've seen the market trade down for today's candle, the second last one on the chart, but we saw the sellers fail to maintain control. We see this very large shadow on the bottom of a small body, and that suggests that the sellers lost commitment down below the 95.67 level and below the Kijun-sen indicator, the Kijun-sen holding as support for the second of the past three trading days, failing to close down below there. It does suggest a lot of indecision in this market. We're caught between the resistance at the Tenkan-sen and the support below the Kijun-sen at 95.68, and at the moment, as we watch this current candle develop, we are seeing some buying coming in, and that's in line with the sellers losing control. The buyers taking back control on this candle, very weak control however, but certainly does suggest a possibility of the market trading to higher levels. Now we have something of a flag type pattern that's formed. It's not copybook. The two lines that that describe the upper and lower boundaries are not parallel, but the whole important thing here is that it is a congestion area, and we will be looking for a breakout in either direction and a close above or below the upper barrier. Obviously a close below the lower barrier will be of no use to us because the market would be interacting with the Ichimoku cloud, and the cloud has potential to hold as very strong support all the way through to the bottom of the cloud down to about the 93.50 area. The best scenario here for traders would be a close up above the upper barrier, with the market clearing the 96.74 level, and flag patterns do tend to be continuation patterns, and that would be the best outcome here. But we can't preempt the market. We just don't know what it's going to do. We just react to the market as it interacts with these levels. But at the moment, if the market does rally here and change the trend to the upside, potential resistance at the Tenkan-sen here at 96.15, potential support that we're seeing coming in at the moment at 95.68 at the Kijun-sen. And moving next to the bands, and here we saw today the market testing down to the lower band as expected following the strong bearish breakout down below the middle of the bands, and the market testing down to that lower band. 95.39 is where it trades at the moment, and as we saw for today's trading, providing very solid support, very strong upside price rejection from there. We'll be looking to it to hold as strong support for today's trading, 95.39. If the market does continue to rally from here, 96.04 is where the middle of the bands trades and should provide strong resistance as we saw for today's trading. So we have these barriers to this market for today. We'll be looking for a breakout to the downside below the bottom barrier, below the bottom band if the sellers are strong enough. No hint of that at the moment, with the sellers losing control from the previous day's trading, but if we do see that bearish breakout to the downside, we'd want to see strong follow through after that to confirm, but no hint of that happening at the moment. At the moment we have a neutral market in that medium term time frame by trading within the bands and trading very close to the middle of the bands. Next to the Aussie dollar, US dollar, and following the weak indecisive spinning top type candle for today's trading, we've seen the sellers come back into the market very strongly. That's in line with the market being bearish in the longer term and the medium term time frames, and also it gives us a bearish market in the short term time frame. The sellers have taken back control of this market, very strong commitment, and they have built very, very solid downside momentum, as evidenced by the size of the black candle. It suggests that the sellers have made a substantial amount of net bearish progress between the open and the close. It does suggest that we should see the market test to the 85.76 level, and possible that we could see the market test through there. Potential support at the previous swing low down around 85.38, and then down at the 85 level. But in line with the market being bearish in all three timeframes and now supported by the Chica span, there is a very good possibility of the market testing through 85.76. But we will be watching that area very, very closely for any potential buying coming in as well. Now, in terms of the bands, we've seen the market break out to the downside below the lower band in a bearish manner. This suggests that we have a very strong bearish market in the medium-term time frame. We want to see confirmation of that with this current candle, and it is developing to the downside with some bearish activity, not testing well through the previous low or the low of today's trading, but there is a possibility of the market trading lower. Importantly, the upper band at 86.25 is holding as resistance, and we see strong rejection from there. So this suggests that we have seen a change of sentiment in the medium-term time frame, and suggests a very real possibility of the market trading to lower levels.